Okay, folks, we are live. Welcome to Sunday Night Futures Live. This is where we discuss the opening price action of the major averages, commodities, currencies, precious metals. We're going to go over it all in the first few minutes. And then what we're going to do is we're going to be talking about where is this market going this coming week and what are the influences that are going to impact the markets. And we're going to be talking about the ECB and Europe's inflation. Russia and Ukraine, Executive Order 14067, extremely important. That has to do with the digital dollar. We're going to be talking about the impact of the digital dollar on us, on the U.S. citizen. And you're already seeing the digital yuan already hammer Chinese people over the head by their so-called caring and loving government. But before we get into it, let's acknowledge the fact that this is September 11th. Prayers go out to everyone out there that was affected. I had a good friend of mine, a fireman, that passed away, Stan Smagala. His name is engraved in the memorial. And he left a pregnant wife at the ceremony, at his memorial ceremony. Beautiful lady. And that kid's now 21 years old. It's incredible. So many prayers and blessings, and let's acknowledge that this is a very special day. Hope everybody had an awesome weekend. So let's get to it. Let's talk about the opening price action of the futures, and we're seeing a pretty strong open here. We're kicking it off with the S&P 500. These are the E-minis, and we're up about a third of a percentage point, slightly more now, and we're gaining steam. Now, this is no great shock. We spoke about this with members on the week ahead commentary. The stock market on a technical basis, meaning the performance of the S&P 500, which I'm going to go over in a moment on a weekly chart, has every reason to go up. And there are a couple of reasons out there where I'm still very, very concerned about this market. But from a technical perspective, the market should head up higher here. Now, we do have resistance immediately above on the S&P 500, right up here at this line in red at around 4,113. So let's create an alert. We already have a new weekly higher high. Because we'll want to know when we hit that resistance level, and it could be tonight while we're recording. We're not that far away. I'm waiting for people to populate in here. Let's go to comments. Let's let the futures market settle down. Yeah, we're going to probably hit that resistance level in the next half hour or so. All right, let's say hello to people. Franklin, good evening, sir. Hope you had an awesome weekend. Good. He says he's got a great weekend. Cool. Awesome. Love the optimism. Luis, happy Sunday. Happy Sunday to you, my friend. I hope everyone enjoyed a great weekend. Yes, I did. It was really nice. Seymour Rivers. Thank you for the sound check. As always, Seymour Rivers. I appreciate that. Pete. Hello, Pete. Welcome. Denny. Mad Lad Denny. And even Madder Lad Talent. Hello. Good afternoon to you. Trader Isaac. As always, a positive force. And the always entertaining Larry Jedi Kid. Happy to learn that the Royal Gorgeous will be cared for by, the Corgis. Those are the dogs. Right. By the Duke and Duchess of York, Andrew and Sarah. Okay. That's Prince Andrew. I wouldn't trust that guy with an alligator. But good to know that the Yorgies have found a home. Paul, hello. All right, let's get to it. Let's continue on here with the futures action. S&P's now up spot 4 or 5%. Let's check out the NASDAQ. Wow, big jump up here on the NASDAQ. Let's scroll back a little bit to give you some context of what we're doing here. This is a big gap up. We're gapping up over a half percentage point, spot 2.62% to be exact. The reason why this is so impressive is that we've gapped up and through not one resistance level, but two resistance levels. So this is not to be ignored. So the question I have is this: do we hold it? Do we see selling into strength? Now, we may pull back, fill the gap, and recapture those support levels. So I'm not trying to be a doom and gloomer here, but whenever I see price action, remember, we're still in a bear market, right? So the trend, by and large, is still down. That's unchanged. So whenever I see a gap up in the pre-market, I always worry about whether or not we're going to get a fade. Were this a bull market, normally I like to see a little bit of a downward action and then a recovery to close higher. But right now, I'm a little bit suspect. That's all. But the weekly charts told us that we should expect new weekly higher highs. We got them. And we're going to be talking about the chart that you need to watch to ensure that the major stock averages continue up higher. Because if there's one chart that I'm going to go over, stick around. If this one chart flashes a continuation breakout, which is implied that it would, it's just as strong as the equity market, then you're going to see some pressure on equities, and in particular, the NASDAQ. Where's my Russell? The Russell 2000 small caps. Big move up higher here. Again, just like you have with the S&Ps, you have resistance immediately above at, let's call it 1900. We're not that far away. We're going to probably tap that tonight. RSI, 30-minute time frame at 70, nearly 79. So a bit extended here. So I would not go chasing this market. Let's see if it pulls back. Does it put in a higher low? Does it consolidate? And are we able to put in new higher highs? So all we're doing right now is we're watching. We're looking for signals by the market that this is for real and that this rally has legs moving into the new trading week. Let's move on to currencies, because the dollar was a major player last week in that it was up dramatically and then it reversed to close down dramatically. And you can see that what we're doing right now is that we are gapping down on the dollar. I don't have percentages yet because that hasn't lit up. That'll light up in a little while. But this is a significant move lower. We gap down below resistance or support, I should say, at around 108.75. Now, why this is significant is that this was a trading range for a while, and we had broken out. And now what we're doing is we are flashing a failure, assuming that we don't rally back to close positive today. You never know. But as it stands right now, this breakout, which we saw here late on Friday, has now failed. They're trying to rally it back now. We'll see what happens. Let's take a look at a 4-hour chart of the dollar. Four-hour time frame. It's still showing that it's holding that breakout point. Let's see whether or not, go back to the 30-minute chart. Let's see whether or not we take out lower lows. Because if we do take out lower lows, you're going to see the precious metal trade begin to really ramp up. And when I say ramp up, I mean more and more bullish price action, just like what we saw last week. Come on, fat fingers today. God, I can't type tonight. Okay, we're good to go. Let's check in with precious metals. Gold first up. Gold is up, as you might expect, with a weaker U.S. dollar, trading up about 90 cents. This is a flat up move. I mean, hardly a blip on the screen. And I've been critical of gold of late because you've seen rallies occur in the pre-market session. Then it fades into the regular hours trade. So you're seeing a lot of sellers above as we rally on gold. And gold was not a great performer last week. Sure, it closed up, but the gold mining stocks really outperformed gold by a long shot. But there's been a lot more technical damage done in those names. Now, sticking with the precious metal trade for a while, I'm only going to go intraday because I know on a weekly time frame where these are at. Wow, look at silver rip here. Silver, we're very long of silver and the miners. Really, really nice. Really, really nice move here. Not unexpected. This is a handsome move. Let's illustrate how handsome it is. Let's pull back to a 4-hour chart. And we broke out on Thursday, consolidated through Friday. Now we have a continuation breakout. So this is what I mean when I say that we want to see higher lows get put in, consolidation, and then a continuation breakout. Silver is just nailing it, completely outperforming gold right now. Back to a 30-minute chart. Now, let's go to a weekly chart for agriculture prices because I don't watch them as much. Soybeans continuing to consolidate here. This week is for last week. This is not reflective of this week. There's no candlestick yet for them on a weekly time frame. Wheat prices, which were looking good this time last Sunday, had a massive, massive explosive move up higher last week. And not only did they have a massive move up higher on a weekly time frame, they recaptured support. What was resistance is now support because we closed above that mark. Very, very strong price action. Corn. This is last week's price action. Again, we spoke about this last week. On Sunday night, it was a fairly bullish chart. It ended bullish by the end of the week. So corn prices, wheat prices to continue to trend up higher. Names like Cal-Maine Foods, it's a little egg company that we did own. We're probably going to be back involved with it this week. This is egg prices. Look at the price of Cal-Maine Foods. This is a massive breakout on a weekly time frame. This stock is going up higher. So members, expect an alert probably tomorrow morning on Cal-Maine Foods. What else do we want to take a look at here? Let's take a look at protein prices. We'll go with feeder cattle. Protein prices, they're consolidating. Multi-month now consolidation on feeder cattle, and they appear ready to either, they're flirting with support here. They did close down, so I don't want to get overly optimistic, but man, if we see a new higher high versus next week, that's going to be an explosive move up higher for cattle. That means that unfortunately, your protein at the supermarket is going to move up higher as well. Let's check out energy. Let's go back to a 30-minute chart. Energy prices are so important for us as traders. And wow, I thought silver was looking good. We're seeing natural gas prices really take off here. We're up 1.43% on natural gas prices. We're long of natural gas. We have some covered calls above. We're using BOIL, BOIL. That's the symbol, leveraged ETF, not for the faint of heart. So natural gas prices on a tear here. And let's take a look next at light sweet crude. Light sweet crude breaking out. It's down at current. I'm surprised it's showing down. Why is it showing down? I think that this is a bad read. because we're breaking out here. And we're not that far off the highs of the session. So I'm not understanding why this is reading a downtick. We're breaking out. It just doesn't make sense. So crude oil is up and it's breaking out. And we've broken out on a 4-hour time frame. You're going to have 86.94 on light sweet crude act as resistance. Let's set up an alert here. Okay. So, before I go to the rest of the content that we want to discuss tonight, we have equity futures up strong. But we also have the proximate cause of why stocks have been down for so long up as well. What does that mean? Well, you have inflation, right? So if you have food prices rising, if you have energy prices rising, we're seeing that tonight, then why is it that equity prices are rising as well? I think we have an answer. Let's go to it. First, let's go to comments for those joining a little bit later. We'll go back. Let's go, Bob. You are fuming over the administration cost in education. Get them, Bob. We will do that. We will do that. The administration is on trial tonight. The regime is on trial. Paul M. Hot one today here in South Florida. It's cooling off here a lot. Yo, back. I know I said I would buy puts if they pumped up SPY, but I stayed patient, Bob. Good for you. Wise move. Waiting on the signal. Keep an eye on yields. We're going to go to yields in a moment. I purposely held off on them. TZ Burton, hey, Bob, remember September the 11th? I already mentioned that, so thank you for that. I did make mention I would never want to disrespect such a horrible event. Happy Patriots Day. Yes, sir. Is that still legal to be a Patriot? I'm confused on that one, though. Hey, everybody. On a United flight to Ocean County, California, listening. Falcon checking in from 100,000 feet. That's attitude. Love that. That's commitment. Seymour Rivers, 1% rate hikes coming this month. I doubt it. I doubt it. If they do that, that's going to be the last one. All right, let's check out yields. I purposely held off on this one because this is the fly in the ointment. And I got to tell you, folks, this is a 4-hour chart. This chart looks like it wants to move up higher. Let's draw some lines. So let's get rid of this one. Serves no purpose. So what we did last week, and I have a weekly chart I can go over as well, but I'll go over it in a minute. This is a 4-hour chart. We broke out, or we are breaking out at current on a 4-hour time frame. We do not have a new weekly higher high yet, but I do want to know about that. Okay, so our alerts are set here. We're good to go. I want to get an overview of S&Ps, how they're settling out here. Still up about 1/3 of a percentage point. Yields breaking out, lower left. Dollar rallying back. That was weaker. It is coming back alive a little bit. VIX gap down, now is beginning to reverse. The lower charts are 15-minute charts. A chart above is a 5-minute chart. Let's get off of a 5-minute chart. 15-minute chart. Still solid price action, but what you want to watch out for are these two charts here. 10-year yield US dollar. 10-year yield US dollar. The US dollar had a very weak last week. Say that 5 times fast. And the 10-year yield had a very strong week. So the weaker US dollar is good for equities overall. Even Microsoft came out during their last earnings call and said, listen, we make most of our money overseas. The stronger US dollar is killing us overseas. So this is going to help the multinationals. The problem is the 10-year yield. So let's get to it. All right. So I don't know why I brought this one up, but I saw this one right before I went live. You could see it was posted 1 minute before I went live. And I mean, this was a former Federal Reserve chairwoman, and is now the Treasury Secretary. And this is the exact problem with this country and globally in the West anyway. We have incompetence. If there's one thing that we have plenty of, is utter incompetence at best, nefarious behavior at worst. And here she goes displaying just how doe-eyed she is and how just out of touch with reality she always has been. She's a Keynesian economist, and she states the obvious. Oil prices could spike in winter, Yellen says. I guess she's using TrendSpider. I guess because we're sponsored by TrendSpider. Let's see if she's right. Let's go over to TrendSpider. Link below, 35% discount code, cheapest price on the web, automated technical analysis. So let's see whether or not Fed Chair Yellen, or now Treasury Secretary Yellen, is accurate. Jesus Christ, she's accurate. She's accurate. We bounced off of weekly support last week. We're probably going to rally. We're up in the pre-markets already. And guess what? She must be using the seasonality function in TrendSpider, because it shows you that in the winter, January, it's up 80% over the past 5 years, 60% in February, 60% of the time up in March. April, a real gangbang. And in May, we take a little dip, but pop back up in June. Why? Air conditioning goes on. So thank you, Fed Chair or Treasury Secretary Yellen. All right. So last week we had a gangbuster week on the S&P 500, closing up 3.65%. When you see a chart like this, folks, this chart has every reason in the world to go up. Why? We were lower on the week. In fact, we took out the lows of the prior week. We even closed up above weekly resistance. That's good stuff. You have your RSI, your relative strength indicator, possibly putting in a higher low. Not sure yet. It's got to break out the higher highs before we say, okay, we're good here. Stokes pausing a little bit. Their momentum indicator, they're still declining. Rallies tend to fade. So the weekly Stokes is still weak, but a little bit of hope they're giving us. Here's where things get a little bit concerning. And this is why everybody's got to be on their toes. This chart, in terms of technical analysis, should close up this week. But remember something. Here's your monthly chart. We are still in a downtrend. We are still putting in lower highs and lower lows. We're up on the month. The month is far from over yet. We have several trading days left to go. A lot can happen. So we don't want to get lured into a false sense of security. And I saw this, and I thought I would share this with everybody tonight. Steve Burns, who I follow on Instagram, posted this. This is a quote from Jesse Livermore. If you haven't read Reminiscences of a Stock Operator, it's a great, great book. I have a copy. I have audio copy, and I have my original copy. It's yellow paged. It's so old, dog-eared, highlighted, and it sits right next to me on my nightstand. Let's help Steve out here, or Gay out here. This is one of our members. We always stand by our members. I'm just going to get him a link really quick. Okay. Thanks for your patience, folks. Gay's a really good dude. All right. So the stock market is never obvious. It is designed to fool most people, most of the people, most of the times. Perfect. Perfect. So how do you know that this market is in trouble? I know what my markers are. I know what I'm going to be looking for. And right off the bat, what I'm going to be looking for, because remember, in the pre-market, E-minis are up strong. The problem is that yields are threatening to move up higher and the dollar is mounting a bit of a comeback. I'm less worried about the dollar, more worried about yields. So when do you know that you're in trouble here? Potentially in trouble. If we start trading down below 4061 on the S&P 500, SPX next week, it doesn't mean that we're not going to rally back and close at new weekly higher highs. But the closer we come to 4 p.m. Eastern Standard Time on Friday, and we're trading down below that current support level, it should be a support level, get worried. Now, if we happen to take out either next week or the following week, roll back over and take out this support level and then take out last week's lower lows, that's a resumption of the bear market. Guaranteed. Guaranteed. I would bet you a nickel that that's what's going to happen. But right here, right now, this is a chart that says I want to go up. So let's talk about, we'll go to what could derail it in a moment. Let's talk about economic data coming out this week. Let me take a quick sip of water, allow Gay to get in here. All right, so this is last week's. It's going to be all about inflation this week, folks. On Tuesday, we're going to get the CPI data. I don't expect a month-over-month increase on CPI, the headline anyway. Why? It's because energy prices have come in. They're beginning to rise back up again. That's why I've been saying, be careful here. Be careful. Energy prices have come in. What you need to worry about now that energy prices are rallying back up is not the August number, which is going to come out this week. What you need to worry about is the September number. You already have natural gas prices right here, right now, today, up 1.5%. Oil prices moving up higher. And the dollar has reversed. If the dollar weakens up, that's going to speed up the rise in oil prices exponentially. Why? Oil's priced in US dollars. So it's going to take more dollars to buy oil if the dollar drops down. That's the golden egg that we have been given with the petrodollar, is the ability to print money and buy oil with IOUs. That's done. That's going away very, very soon. So CPI coming out this week, PPI that comes out on Wednesday. That's the level of inflation at the producer level. We're going to get retail sales this week. We're going to get initial jobless claims. We get that every week. Empire Manufacturing Survey, that comes out on Thursday. Folks, they declined. They expected a beat last month, actually a positive number, not a beat. They expected a positive number on the Empire State Manufacturing Survey last month. It came in negative 31.3. This is an economy that is melting away, and they won't admit we're in recession. The University of Michigan Sentiment Survey, that comes out on Friday. So it's going to be an important week, and it's going to be all the more important because, the only earnings trade I have coming up this week is Adobe. That comes out on Thursday, I think, and that's it. Earnings season is over. Valuations. Last week, we were fairly valued. This is right. We're so on the borderline. So we had a rally in equities last week. We're back to overvalued on the Buffett indicator. We are, where is it? 37% extended beyond. They changed the chart up on me. How dare they? Here we go. Historical trend. They tricked me. What did they change this to? I'll go over this later on. They changed this. Interesting. One standard deviation beyond historical norm. So equities are expensive. another benchmark of how we value equities right now. We're back above 30 on the Shiller PE ratio. So, folks, equities are not cheap. Prices have come down, yes, but so have earnings. So what happened last week is a turning point. For the first time in 12 years, the ECB has increased interest rates by 3/4 of a basis point. Why is that significant? I'm glad you asked. The reason is that you have the United States has been the only game in town going back to Yellen back in what was it, late December of 2015, when she increased for the first time in 10 years interest rates by 1/4 basis point. It took her another year after that to increase them again. That was to screw Trump. So now it's the ECB that is increasing rates. So we've had a rising US dollar and a declining euro. So what has that done to inflation over in the Eurozone? Armageddon. The weakening euro is absolute Armageddon on energy costs because they have to import their energy costs. And they actually told their supplier of 40% of their oil and natural gas, Russia, yeah, we don't want to do business with you anymore. And Russia said, okay, all right, we're going to cut off Nord Stream 1. They did that last week. Europe is in a lot of trouble. How much trouble are they in? The leading powerhouse of the EU is Germany. And Germany, this is out of sequence here. Germany I want to show you this. God darn it. Where is it? I'm going to fire my producer. That would be me. I must have deleted it. God darn it. Germany's, I forget what the number is, but their energy prices have gone parabolic. I wish I had that. It's a great chart. Here, no, that's not it. Here we go. Germany's benchmark electricity prices is up over 860% in a year. That, folks, is not inflation. That is hyperinflation. Germany hasn't seen inflation like this since the 1920s Weimar Republic. They are in a lot of trouble. And it's not just Germany. It is the Netherlands, Belgium. You name the country, there are going to be pitchforks in the streets over there because of their energy policy. This is the World Economic Forum. They're trying to change the way that governments run to the Chinese model. And we're going to go to how they're going to do that in a moment with the digital dollar. Now, you could expect that the ECB, they stated, Christine Lagarde stated, they're going to continue to jack up interest rates. What happens to the US dollar? US dollar, especially if the Japanese get their act together and defend the yen, the US dollar is going to drop like a rock. As for Britain, they just named I can't believe this is a conservative. New conservative PM Liz Truss announces a cap on energy bills to combat cost of living crisis. And the way it's structured is absolutely bizarre. You want to talk about taking from the poor to give to the rich? The way this is structured is exactly that. Let's talk about it. This is a conservative, folks. In her first major move in a leadership role, Truss announced she was elected by 0.02% of the electorate. In her first major move in a leadership role, Truss announced the typical household will pay no more than $2,880 per year for each of the next 2 years. So wait a minute. So if I double my usage of energy, I still only pay $2,880. So I have no incentive to not use the energy. And if I own a castle, I actually get a cut on the cost to heat my castle because I get a cap of $2,880. I bet you it's a lot more than that right now to heat a castle. It was probably a lot more than that 20 years ago to heat a castle. But yet, this is the cap. This is a conservative, folks. This is a conservative over in Britain. This is her plan to fight rising energy prices. Not new production. No. Not new production. They're going to subsidize more inefficient use of a product that is lacking. They don't have enough of it. She's in charge. You can't make this stuff up. Canada. Cash handouts to Canadians could spark inflationary fire. No joke. How do we not know this? We're in this predicament mainly because of the 21 years since September the 11th that we've had this monetary Roach Motel. You check in, but you can't check out of printing money. That's a Peter Schiff phrase. I'm stealing it from him. A monetary Roach Motel. You check in, but you can't check out. And this is what these people are planning to get us out of this disaster. More cash handouts. It's the worst thing that they could possibly do. They need to stop spending money. They won't do it. That's their power. So what happened last week when finally the Eurozone finally woke up and said, yeah, man, Jesus Christ, the only way that we're going to stop this inflation is we got to tighten up the money supply. We're not going to stop spending. Don't be crazy. We're still going to give cash handouts so we can keep our power, but we're going to have to jack up interest rates. So what did that do to the euro? Blammo. Up nearly 1% on the week. Bullish key reversal bar. If you're not familiar with what a bullish key reversal bar is, one of my top 5 favorite candlestick patterns, link below, 5-part video free. 5-part video tutorial, free. Link below. Take advantage of it. And it was up on massive volume. Very good price action. We broke out an RSI. Euro is going up higher. The United States is no longer the only game in town in terms of raising rates. Competition is on for the U.S. dollar. What did the U.S. dollar do in the face of weakening or rising euro? Bearish key reversal bar. It made new multi-year highs. Couldn't hold them. Bearish reversal bar. We have lower highs on RSI. Stokes is still looking strong here. So by no stretch of the imagination am I saying that the rally in the dollar is done. This is not a broken chart. Right now, it's a bump in the road. What I think is going to happen here is that we could quite possibly pull back to, let's call it 2860 on the dollar bull ETF and consolidate there. Then you're going to get another rally back on the dollar. And it's at that point, you take out the old adage, do we break out or do we break down? The test is always at the top. The test is always at the top. If we take out last week's highs and we close there, well, the dollar game is still on. It's a very bullish trade, and you don't want to be in gold. You don't want to be in silver. But if we pull back, rally, put in a lower high, and then break down to new lower lows, you got to be long of gold and silver. So this is an executive order. I've gone through this. I've done word searches on it. You can see I typed in here currency last. You won't find cash, except it's out of context. I'm looking for cash in terms of cashless society. The only time you see cash mentioned in this executive order, this is executive order 14067, ensuring responsible. Whenever you see responsible come out of government, you know you're in trouble. You know you're in trouble. Responsible. Development of digital assets. So cash is found only one time, and that's where they find the context to where it's going to help us, the United States citizen, from cybercrime, and this could all be true. It probably is true to a certain extent. But what they don't mention here is that the system will be cashless. Cashless. This is an executive order. This was signed back in March. It's already in effect. And this makes it policy for the Biden administration, of all administrations, to pursue a digital dollar, cashless society. They won't admit it. They won't admit it, but that's where we're going. They're taking the Chinese model. The Chinese still have currency or cash-based system in certain areas, but they're slowly but surely getting rid of cash over in China. What does that mean? Oh, the one word here that is oddly missing. Sorry for that noise. Programmable. We already have a digital dollar. The Fed chairman admits it. He goes to a printing press and he prints up dollars. They're all on a screen. There's no cash out there. He just prints them up, sends it over to the banks. So the real danger for American citizens is the programmability of the digital dollar. And what's also the power to the government that is now taken away from citizens is going to be, at current, if you're collecting a W-2, you're a slave. You're an absolute and utter slave to the system. Why? They take their taxes out up front. Whereas if you have a S Corp, if you have a sole proprietorship, if you have an LLC, well, it's on good faith. You're filing quarterly, and you're escrowing money. Hopefully you're escrowing money to pay your taxes. I know I do, and you get settled up at the end of the year, and you either get a refund or usually I pay up. At the end, I haven't gotten a refund from the government. I don't know how many years. So what this is intended to do is to basically put everybody on a W-2. You have a C Corp, S Corp, you're not floating that money anymore. They're going to take 20% and put it right into the Federal Reserve. Programmability. Suppose the Federal Reserve wants to jack up interest rates, but they can't. What they could do is, with programmability, is say, listen, we're going to program these dollars here. If you do not spend them within the next 30 days, 10% expires worthless. You lose that money. You're forced to go in and spend that money. You may be a saver. You want to invest it. You can't. You need to spend it. So this is the danger of central bank digital currencies, and they already have it in China. I think Bermuda already has it. And I want to play this clip here. I may get a commercial. I probably am going to get one. I'll try to skip through it. This is Jim Rickards. He's an economist. He's worked for the CIA. I followed him for many, many years. A very, very reputable source. I rarely back any specific individuals as being credible sources, except for Peter Schiff. Very few. Jim Rickards is one of them. So let's hear what Jim has to say. I'm probably going to get a commercial here. I'll try to skip through it as quickly as possible.
And like a year or two later, but you're already on the hook for the mortgage, except that the developer stole the money and didn't finish the houses. But the banks are saying you got to pay the mortgage, and people are saying no. So people are traveling around China to join these protests, but in China you have a social credit score, so they identify you through the banking system, and then turn off your ability to buy a train ticket or a plane ticket.
Wow.
And then it goes on from there. You post something, the worst thing you do in China is compare Chairman Xi to Winnie the Pooh. He kind of looks like Winnie the Pooh. So, it's true. And so if you post a Winnie the Pooh meme or something, good luck getting your kids into school. Good luck getting health care for yourself, et cetera. So my point is, this is already being done. And then people say it'll never happen here. Why not? Show me something that was really poorly done abroad that isn't being done here sooner than later, particularly with the Biden administration. So I'll leave it at that. But the point is, this is more than just a digital currency. This is more than just convenience and cost savings, which it is. That's how they sell it. This gives them total surveillance, total control. It's the ultimate realization of the total surveillance state. And just look at what they did to Russia. We don't have to debate the war in Ukraine, but they froze the Treasury notes held by the Central Bank of Russia. Well, what's the difference between that and default? Like, why do you buy a Treasury note? Well, you buy them because you think the Treasury is going to give you your money back, and with interest. But when they freeze them, they're like, well, no, actually, we're not giving you your money back. So what's the difference between that and default? I would say there is no difference. So we've kind of already defaulted on Treasury notes. Yes.
Think about that. Think about that. We've already, and I'll go to a chart here just to put it into context. I don't want this to be a hyperbolic session here. I want to put into context. A, stupidity. B, the size of Russia's exposure to the United States in terms of debt. So back in 2018, anybody who didn't see this coming, that the Russians were setting up to get off of the SWIFT system. This is why the ruble is worth more than it was prior to. It's at highs not seen since 2015, the ruble. Initially, it tanked, and then it skyrocketed up higher. Why? They have assets. They have oil. They have food. And they have customers in the BRIC nations, China, Brazil, India. They're all buying their stuff. So what they lost in customers over in Europe, they made up for by discounting it over in Asia. Their cost of production is much lower than here in the United States. So no big deal. The ruble through the roof. So this goes back to 2018. You could see that they had very, very little exposure, even back then, to the United States. And as of, I had this chart up here. I don't know what I did with it. As of the time of, here we go. In June, they only have like $2 billion worth of treasuries. It's not the point, though. They froze their treasury assets, and they're not getting paid by the full faith and credit of the United States of America. That's a de facto default. It doesn't make a difference if it's $2 billion or $10. If you're not going to pay your debts, you have therefore defaulted. It's the same thing that happened back in 1971 when Nixon took us off the gold standard. He devalued the U.S. dollar. He wouldn't admit it. They still won't admit it. It's still temporary. He said it was temporary back then. That's 50 years ago. So we have defaulted, and we're heading towards a central bank digital dollar here in the United States. Call your congressman. Tell a friend to call their congressman. There's already, of all things, bipartisan legislation in Congress for this to happen, along with an executive order making a policy for it to happen. How much time do we have here? I want to do some requests. All right. So at some point in time, the Federal Reserve is, and I think this is what the markets are sniffing out, weaker U.S. dollar, stronger euro. If you take a look at this chart here, all the while since we've been in recession for a while now, they won't admit it. But if you take a look at every metric, we're in recession. And this is the negative pre-announcement. This is for Q3. Infotech. Huge pre-announcements of negative guidance moving forward. So where do we want to put our money moving forward? Well, financials looking good. Energy looking good. Everything else, not so good. It's a bleak outlook. So what the markets are beginning to sniff out, with the only drip of treasuries coming off their balance sheet, the Fed's balance sheet, we went over that last Thursday night, is that the Federal Reserve at some point in time is going to have to pivot. And the debate is this, is that will they raise the target for their inflation metric up to 3% to 4%? Right now, it's on average 2%. If they raise it to 3 or 4%, then that gives them the argument to not be as aggressive with raising rates, because they're they're going to allow inflation to run twice as much as what they promised they wouldn't allow to happen. So you have this guy, Clarida. He's a vice chairman of the Federal Reserve. He came out last week and he said that Fed funds rate is going to 4% come hell or high water. Okay. Let's take a look at where the Fed's funds rate is right now. And the economy is already in meltdown mode. Here's Fed's funds rate at 2.33. So he's telling us that he's going to nearly double the Fed funds rate. For those not familiar with what the Fed's fund rate is, that is the cost for a bank to go to the Federal Reserve, borrow money, and lend it out to you in retail credit cards for 17 to 21% on your credit card. It's a license to steal. So the banks are only paying 2.33%. They want to jack it up to 4%. The banks are still going to be cash rich. They're going to do very, very well, robbing you blind and me blind. And I'm not impenetrable by the banks. But he's saying that they're going to nearly double the Fed's funds rate and the economy's not going to tank. Well, the markets are saying BS on you. How do we know that? We know that because of this. This is posted by Jim Bianco. If you're not following him on Twitter, you really ought to follow him. He puts out really good data. This is the futures market, right? So these are futures traders out there, and they are betting on the future, right? So where is the smart money betting that the Fed's funds futures are going to be going anytime soon? Down, not up, by nearly two times where we're at right now. They are predicting Fed's funds rates are going to be higher, but less higher than what even a vice chairman of the Federal Reserve is jawboning the market about right now. That's why you're seeing equities begin to perk up. Let's go some comments. Trader Mac, yes. Please like, subscribe. Helps me out with the YouTube algorithm. And I really appreciate you folks being here, especially on 9/11 on a Sunday night. So thank you. My honor to be here. And yes, please like, subscribe, click the notification bell to get notified of when we go live. And if you're new to trading, 5-part video tutorial on my top 5 favorite candlestick patterns, you'll understand better some of the terminology that I'm using. And it's free. This is going to be good. TZ Burton, I paid those IRS bastards this year. I am more real estate investor. Okay. TZ Burton, Canada is done. My wife's family's from there. Yeah, it's sad. Such nice people. Germany listed to Greta Thunberg. PA has a lot of oil. We can be energy independent, just like PA. And we were energy independent. We have a lot of comments here. I can't go through them all. Smash the like. We're at 50%. Thank you, Clark. We're 50%. So yeah, please, if you haven't smashed, hit that like button. Please hammer it, destroy it. Yoga Mac, CBDCs on the way. Get your assets in order. Yeah, real estate, art, coins, hard assets, man. Hard assets. Canada is a fascist state under Trudeau. Yeah. I think he's got the intellect of a 2-year-old. I think he's a puppet just like Biden. I have seen YouTube videos from Russia as recently as this week. Russia doesn't seem to be suffering. Well, I actually have some articles to go over here. And I was hoping for a resolution to this conflict. I don't think it's going to happen. You know, Russia, this came out earlier, and I always, with all the disinformation out there, I wanted to validate this because remember early on in the campaign, everything that you had was Russia losing. You had that Black Island thing. They lost that battle, and you had the Eagle of Kiev, Ghost of Kiev. That was a joke. It was all made up. So I wanted to validate this. So Ukraine retakes town within 50 kilometers of Russian border, and the rumors Putin to issue full declaration of war. Folks, it's important to mention something here. You know, the Russians have military hardware equivalent to that of the United States, and they haven't really used it. They've only used hypersonic weaponry limited. They haven't used heavy bombers. They haven't done that yet. Right now, this is considered to be an emergency action. If they issue a full all-out war on the Ukrainians, I don't know how Ukraine defends himself against heavy bombers. I don't know, unless we've sent them such advanced weaponry that they're going to be able to shoot down those bombers. You can expect that Chinese troops will move in, and it's going to expand. It's going to get really, really bad. I was hoping for the Russians to hold this area here, declare victory, annex these areas, and go home. So this may get a little bit more prolonged, unfortunately. But the bad part is that Europe is going to suffer very, very bad. So if you're looking for the trade here, the trade is this. Europe is incompetent. So is our government, but they're even more incompetent because at least they don't have they have their faculties, right? But they're still stupid. So they're going to, the elites are going to be able to heat their homes. They're going to do just fine. The people in the streets in Germany and across Europe, they are going to suffer like it's nobody's business. The only thing that the Europeans can do is jack up interest rates to kill demand. The problem is that's not going to help. The demand is there. People need to heat their homes. They're going to destroy their economy. If they don't address production, they will in no way be able to resolve this issue, and they are going to continue to deteriorate. What does that mean? They're going to jack up interest rates. Euro will strengthen. What's going to happen to the dollar? It rolls over. What's the trade when you get the breakdown on the US dollar? Simple. We already began the accumulation of gold a while ago. For the first time, this is the gold mining index. This is the GDM. So this is a mixture of the senior miners and the junior miners. And you saw a bullish reversal bar on the week. It outperformed gold. It was up nearly 5.5%, while gold was only up just over 1/3%, whereas silver was up 4.5%. So silver continues to outperform gold. Gold should play catch up, but we're not there yet in terms of the confidence level to begin buying more gold. So I think we will play catch up, assuming that the euro breaks out. If the euro breaks out on this chart I referenced earlier here, you bet your bottom dollar that the dollar is going the opposite direction and that gold and the miners are moving up higher. What else did we begin doing last week that I've been talking about for over a year now? But finally last week we executed. And the reason why we executed it, I was looking for a chink in the armor on the US dollar. We saw it last week. The ECB provided that. They raised interest rates aggressively. They promised to do more. That hurt the dollar. Where do we want our dollars to go now? Because we have a lot of them. We saved up a lot of cash. We're putting them into emerging markets. We want to send them over to the BRIC countries. Those economies are growing. They're backed by commodities. And what did emerging markets do? We did not buy the EEM. We bought a ETF. I'll soon disclose it. It's an emerging market ETF ex-China. No China whatsoever. I don't want anything to do with China. So emerging markets rallied over a 0.5 percentage point, and we have begun bull operations on emerging markets. We've added to the GDXJ, junior miner, for gold for the first time in months. I forget when the last time we bought it was. But these are the trades that we're looking at to jack up our core portfolio. We're going to still trade our options and work around with cash flow strategies until such time as the core positions begin to break out and we add more money aggressively to those positions. So I think that's pretty much it. Oh, and I did validate that this is true data, because I went to the Russian Times. The data I'm referencing is the pullback by the Russians. And I went to the Russian Times, got it from the horse's mouth. So I validated. You're not getting fake news here. We're validating the information that was provided by the opposite source. Who doesn't want this information coming out? The Russians don't want this coming out, but they're admitting it. All right, let's do some chart requests. Yeah, we'll do some. I have a couple of minutes. We'll keep it limited. I got to go to the members area, which I should have done earlier. See what they requested. All right, PNR. Let's do it. Folks, again, we're going to be using TrendSpider, automated technical analysis. Use the link below, 35% discount code. Take advantage of it. PNR. Enter, weekly chart. Nice move up higher last week. Would I buy it here? Not yet. The reason is this, is that with the automated technical analysis function of TrendSpider, it's telling me on this weekly chart that I have weekly resistance immediately above. So there's not enough room here for me to want to put a lot of risk on and hope that we break through these two resistance levels above. So what I'll do is I'll create an alert up here. If we break through it and we close above it, it's a buy. And until such time, I would ignore it. I think if we're putting in a higher low, am I confident that we're probably going to break out? Yes. If you wanted to scratch the itch with a few shares and you promise you're going to use a stop loss right below last week's lows, fine, go for it. Scratch the itch, get it out of the way. And when we overlay monthly resistance, just take note that you're going to have monthly resistance up at $54.15. So if you enter on a breakout, resistance up at 54.15 on PNR daily view. Nice price action, a lot of overhead supply up here, a lot of resistance above. So just be aware of that. Trade accordingly in terms of position sizing. Trader Isaac, Oxy. Can it pull back at 50-day to 50-day on a day? I'm assuming the daily time frame. Let's get rid of this. All right. So do I have my 50-day here? Or is this my 20-day? Here, let me bring up, I don't have my setting set for 50-day moving average on TrendSpider. Make this quick. All right. Can we define risk on Oxy pullback at 50-day for new buy? I think you could buy this here. I think I would scratch the itch here on Occidental. 3 consecutive days of trading at the 50-day moving average, looking good. The key is the longer term trend. I would use a stop right below that 50-day moving average. But you take a look at the weekly view, and while we're under a little bit of pressure here, no doubt about it, you want to use a tight stop, but the path of least resistance remains to the upside on Occidental. So I'm good with it. You're welcome, Paul. I think somebody else requested wheat, and we'll leave it off with wheat. Okay, let's go over to the weekly view of wheat. We talked about this earlier. We had a big breakout last week. We have resistance immediately above on, this is an ETF, the Texturium ETF, $8.92. Look for a breakout above this before you bought it. Put it at $9 a share. So I would not buy it here. You have resistance immediately above. Again, daily chart. They're telling you resistance immediately above. We're right there. You got to wait for a breakout. Show me a 9 handle on a closing basis. I'd be buying wheat hand over fist. And with that, folks, thank you for being here. Like, subscribe. Use that link below to get the 5-part video tutorial on my top 5 favorite candlesticks free. Also, link below. If you're not familiar with a Strangle options trading strategy, our top cash flow generating machine, take a look at that video as well. Folks, thanks for being here. My pleasure. Paul, thank you very much for being here. Thank you for the kind words. Everybody have an awesome night and a profitable trading week. And watch out for those yields, Talon. You're welcome. I'll talk to you tomorrow. Have a profitable trading week. Be well. Talk to you soon.